So just thinking from the point of view of the Nigerian market and even just global real estate, and in our context for Nigeria, I'd say global real estate is probably some of the countries we've indicated there, the UK, UAE, the US, Nigeria, and other parts of Africa. Just leaning back to some of the conversations that we had today, any astute or let's say refined investor needs to always start from the point of view of why are you investing? Where are you in your journey of investments? You know, whether as a family office, or even as a business. And that will largely shape where you choose to invest. We've heard, inheritance taxes in the UK at 40%. That's part of your wealth consideration. And real estate is a critical, central asset within your wealth creation. And so clearly, when you're thinking whether in the short term or in the long term, you are going to take into account some of those considerations. When you think about Nigeria, you think about inheritance tax also, but it's more so capital gains tax, and some of those things that used to protect people are being removed, as we heard, in terms of some of the tax reforms that are coming on stream in the near future. But back to the central question. When we talk about, the current global economy, globalization is something that cannot be ignored. And so, as a Nigerian, you can now live in Dubai, you can live in London, you can live in the US, you can live in various places. And so ultimately, you think as a local person, but you think in terms of access, where will your money go the furthest? Today, but also in 10 years, in 20 years. What do I mean by that? If you think about, we operate mainly in the upper quartile, the luxury space in Nigeria. So I'll use some examples like Banana Island, Eco-Atlantic, Ikoyi, Victoria Island. So 5 years ago in 2020, Banana Island was on at about 450,000 naira per square meter, which if you convert, is about $1 million, was about $1 million. In today's money, in 2025, 5 years later, it's about 3.5 billion naira to 4 billion naira. So in dollars, you're talking about $2,500 versus $1,000. So if you do the calculation, you can see that there's definite growth from a global currency standpoint. Take Dubai and say, what is the price per square meter for Dubai today in similar locations? It's about $3,500 to about $5,000 for the high growth areas, the Business Bay, Jumeirah Island, those central locations as it were, which you could, I guess, compare to your Ikoyi, Banana Island and all of that. But when you look at infrastructure, when you look at past track record, 5 years ago or even 20 years ago, you'll see that the growth in Dubai is significantly more from the point of view of being steady and the fundamentals that actually underpin. You're talking about, population growth. You're talking about visionary leadership. You're talking about infrastructure that is, next year in 2026, they're going to have flying taxis, right? That's how futuristic they're thinking, as it were. Whereas we're still talking about clean energy, dirty energy. We're still talking about potholes in our highest, ranking locations, as it were. Those are not considerations to ignore. However, as a Nigerian, your first hat is a local hat. And then your next thing is then what's your timeline? Because you can't take all your money and go to Dubai or London. Talking about London, London is an established market. Legacy, educational connections, steady yields, as it were, but very slow, very low. And especially now with some of the things we've heard today, the num-dum, changes, the inheritance taxes, and all those things happening, as it were. When you think about it, and you have options globally, the question is that still the best place, as it were? But it depends on who you're asking. If your kids are going to be going to school over the next 5 years or 10 years or 15 years, perhaps your considerations are different. So just to summarize, what I'll say is that what we're seeing with our clients, who are mainly ultra high net worth clients, is that the first question is always, who are you? How are you thinking? What's your stage of investment? What are your values? What is it that you're building for, as it were?
The UK offers a stable market. It has done for many, many generations. We have a strong regulatory and legal framework that protects investors and allows them to generate revenue and capital appreciation. Capital appreciation has historically not been as good as Banana Island of late, I'm afraid, but has historically been significantly beneficial in the UK. Late in 2024, Savills released their 2025 forecast for capital appreciation in the UK, and in London it was 3% on residential properties in 2025, and by the end of 2029 they're expecting 17.1% capital appreciation, and the rental yield will follow that as well, the same trend. We can look to diversification. The UK doesn't doesn't preclude any foreign investor from investing into residential commercial investments in the UK. There are also further investments that one can have, so the student accommodation, which is particularly pertinent at the moment. There is retail investment, there's the mixed-use developments, and I know a question that was raised when we were discussing this was real estate investment trusts as well. So we don't currently have any preclusion on individuals investing in those, and they offer tax advantages for non-UK residents. They're freely tradable on the London Stock Exchange, so therefore anyone the world over, particularly in Nigeria, is able to invest in those products. We have mentioned tax. A number of previous sort of panels discussed tax. Of course, the abolition of the non-dom regime is a significant change in the UK tax landscape, and that will dissuade a lot of people from migrating to the UK to live there. That doesn't necessarily mean that investing in the UK can be tax inefficient. With suitable planning in advance, you can still have tax-efficient planning by real estate investments, whether that's buying residential property in personal names and putting in place English wills. We have full freedom testamentary disposition in the UK, even for foreigners who are forced to pass their assets by forced succession regimes.
Fundamentally, it's about location, it's about currency, and it's about tax and duty incentives. So on location, on the macro, we understand. Pick any continent in the world, Asia, Africa. You go to the largest population, the largest or one of the largest economies, and you go to the commercial hub, the commercial capital of that country, in the position of that continent, okay? So this is the population leader, it is the industry and economy leader, and you have gone to the commercial capital city. This city happens to be the most populated city in the country, as Lagos is, and the fastest growing in real terms. It also is the smallest by landmass in terms of the geography. So in terms of the supply-demand dynamic, it's clear. There is a lot of demand, particularly if you look at the rate of urbanization, people moving from rural areas to urban areas for economic opportunity and otherwise. It is clear that any continent, forget Africa, forget Nigeria, forget Lagos, where you have this dynamic, there is going to be significant value in real estate, and the medium to long-term prospects are going to be strong. That applies in Lagos. So bring it down from the macro to the micro. Why would I invest in Alaro City in Lagos? Because of the second factor, currency. So location, we've identified in the earlier panel that the Lekki-Epe axis is what they're referring to as New Lagos. It's where the majority of public and private spend is moving in terms of infrastructure and real estate. It's where the new airport is going to be sited. It's been in the press. It's been approved by the Federal Executive Council. It's where the largest seaport in West Africa, larger than Apapa, deeper than Apapa, has been operating for over 2 years, changing the nature of international trade with not just Nigeria, but the region. It is where the largest free zone, a hub for economic value creation, is located. Largest free zone in West Africa is in that axis. It's where Alaro City is. And once you are there, you tackle the real issue. The real issue is currency. A lot of people are investing in Canada, investing in the UK, they're investing in Dubai to generate passive income in hard currency.